Good morning, good afternoon, good evening, depending on where you are on the planet. And welcome to the the delayed running Bull versus Bear webinar on Wednesday, 1st of June. Delayed by 15 minutes, technical issues, but we're through that now. Welcome. We're going to go through our usual regular run through in here today. We're going to take a look at the calendar, what we've had, what we've got coming up, what are the major geopolitical, macroeconomic, fundamental events driving markets right here, right now. Taking a look at some articles from the major news wires, and then we'll take a look at some charts to see where the potential opportunities lie today. I'm going to start off actually with my weekly update that goes out every weekend. Usually gets put onto the into the members area, into the trading room under the research reports uploaded on a Sunday. And I just want to use this just to show what we've got coming up for the balance of this week. So it's been a relatively quiet start to the week, given we had the Memorial Day holiday in the US on Monday. And then yesterday we had some light data, but we've had some significant data in here through this morning. And we'll go look at the calendar in a second, but just want to highlight what we've got coming up. So we've had the S&P. It's now S&P. It used to be Market. Market has been acquired by S&P, as far as I'm aware. Manufacturing PMI data in here from the globe, from around the globe, and particularly we look at the European data shortly. We also get the US data from S&P / market, but we also get the ISM data, which is the more watch data from the US this afternoon, and also Bank of Canada interest rate decision this afternoon as well. And then over the next couple of days, we've got to continue to get significant data. Just a heads up, UK markets are closed. We have Jubilee. UK Jubilee holidays on Thursday and Friday this week, back to back. Very unusual. The Queen's 70th Jubilee. So we are closed here Thursday and Friday. That doesn't mean I won't be on the webinars for you guys, but just a heads up. That might just have, I don't think it's going to have major liquidity problems, but the London, UK is a big sort of centre of finance, but markets here will be closed. But we do get the US ADP employment. That usually comes out on a Wednesday. So we're getting that tomorrow. That usually comes out Wednesday, as I say, but because of the US holiday, Memorial Day holiday, that's been it's back a day. So it's coming out on Thursday now. And then we get the S&P and also the ISM PMI data, the service sector and composite data from S&P for the global data, and then the ISM service sector data on Friday, and we also get the US employment report. So it's a real busy day on Friday. So we've got kind of quite a lot coming up. Let's take a look at the actual calendar for today. And you see we've had this European manufacturing PMI data. Now, in most cases in here, we've actually kind of beat expectations, slight beats here. You see France, German, Eurozone as a whole, beating expectations on that data in here. But then in here, we've got like French manufacturing data at 7-month low. Well, yes, it's at 7-month low, but that's not the important thing. The important thing is not it's a 7-month low. The market's already pricing in what the forecast is. The market then reacts to what the actual number is in relation to the forecast. So yes, it's at a 7-month low, but that's not really deemed as a negative because it beat. European shares slip as weak economic data heightens growth forex. Yeah, well, does it though? I mean, this is where journalists don't really understand how markets work, and the fact that German retail sales fall more than expected. Well, that may be the case, but Eurozone factories struggled in May. Well, yeah, they did, but that was priced in. That was already in the market. So let's just look at that German retail sales data. Okay, so we had a miss on the German retail sales data. Expected at 0.2, down 5.4. That's a significant miss on the German retail sales. So that is more significant. But the PMI data really, if anything, beat expectations in here. And again, look, Eurozone factories struggled in May as consumers switched to leisure activities. Well, yeah, they did. Yes, we know they did, right? But that was priced in already, and we actually beat expectations. There was some more other little kind of signs here, not really significantly impacting markets we're looking at, but just more signs of potential inflation down the line. UK food prices surging most in a decade. So we know inflation's running high. We know food prices are running high. We know energy prices are running high. But in here, we've had retailers highlighting in here. So this was where was it? Federation of, where is it today? The British Retail Consortium. So the British Retail Consortium in a survey, show food prices rising at the fastest pace in a decade. So obviously that's, and then potentially, and also highlighting potential for them to continue to move that way. So again, that's a real concern. If that's highlighting, because obviously obviously the food prices in the UK, they're not just food prices from the UK, right? So I know every economy's got its own nuances, but those food prices are going to be a reflection of global food prices. What else we've got here? Let's take a look at the Bloomberg's roundup from 5 things you need to start today. There's not a lot in here that's really that important, really. Yellen in here admitted Tuesday she'd been wrong last year in saying inflation wouldn't pose a continuing problem. I didn't fully understand, was what she said. And then Bostic said his suggestion last week the central bank takes a September pause from resume research shouldn't be counted as a Fed put, or believes that the central bank will come to the rescue of markets. So that was him reflecting on comments that he had previously made in here. Ukrainian strategy, again, this is not really impacting markets. Biden supporting more weaponry, longer range weapons in here for Ukraine. This might have a little impact on markets. Part of the reason we were down yesterday, so we rallied on Monday when the US was closed, and even the day when the futures were open, we had the shortened session on the futures, so markets were up, and that was positive news out of China that we had on the relaxing of lockdown. So we were up Monday and then back down Tuesday before we opened, and that was really on the fact that oil surged higher on Tuesday. Actually, on the if you look at on the daily chart for the current front month, we actually went above the peak that we posted earlier this year. So oil surged higher, and because of that push higher in oil, that's obviously like a negative. That's another inflationary pressure. So equity markets didn't like that yesterday. Even though part of that surging oil prices because of a positivity maybe on the global economy being driven from the demand side and not necessarily from the supply side, but that positivity then from the global economy that pushes oil higher, then it fuels inflationary pressures, which is then a negative. So we saw stocks dip lower, and then stocks did rebound when oil retreated from that high. So oil went higher, stocks went down. Oil pulled back from the highs, stocks saw a rebound through the session yesterday. And so this is kind of important. So I'm just going to read this verbatim. So to the many reverberations from Russia's invasion of Ukraine, another might be an early end of the OPEC and allies oil supply pact. The 23-nation alliance led by Saudi Arabia and Russia is due to finish to finish restoring production halted during the pandemic by the end of September. So because of they've been producing more, and they're due to halt that by the end of September. But the Wall Street Report reported yesterday that OPEC is contemplating suspending Russia from the coalition's quota system as sanctions prevent Moscow from increasing output. The Saudis and the United Arab Emirates might fill the resulting supply gap. So that's kind of seen as positive. It's filling the supply gap that we're missing from the fact that Russian oil is not getting to the market. The Fed start their de facto quantitative tightening as of today. So initial balance sheet runoff of 47.5 billion per month. That starts from today. So we're seeing that come through. This is not really news in here. This is talking about the dollar yen and yields. It's a bit of a mixed up paragraph actually. And then just focusing here on what we've got coming up today. Manufacturing PMI coming up in here, an ISM data. Both the market and ISM data. So we're just going back, skipping back to the calendar in here, going into this afternoon. We get the manufacturing PMI. This is the stuff that comes from the S&P stuff. So what we've had in here, so it's old market / S&P data in here. Not as much watched in here. So this comes out 09:45 Eastern time. So 09:45 Eastern time, we get manufacturing PMI, and then 15 minutes later, the more watched in here. So that's that manufacturing PMI is the market / S&P data. Then 15 minutes later, we get the more watched ISM data, more important data, the Institute of Supply Management, the US data that we get then at 10 o'clock Eastern time. And then at the same time, we get the Bank of Canada interest rate decision. Okay, so in here, expecting a rate hike there of 50 basis points. So watching out for that. And then we get some Fed speakers this afternoon. So watching out for those. We get Williams speaking at 11:30 Eastern, Bullard 1 o'clock Eastern, and then we also in between there we get ECB Lane. Now, Lane is the chief economist, so that would be worth watching out for as well potentially. In between those Fed speakers, Williams and Bullard later today. Right, let's move ahead. So we've already gone through, so on all these articles in the European Gone through 5 things to start your day now. So again, mixing this stock struggle. Were they really struggling? Where are we right here, right now? Go look at where we are. So in here, we had a little bit of a dip yesterday. This morning, are we struggling? Well, no, we're up, right? So Nasdaq's pretty much unchanged. And we've got the S&P just slightly up and the Dow Jones up 0.4% and about 0.2%. So we're slightly higher in here. Obviously, it depends when these guys go to press, but stock struggle, there where they dipped back lower yesterday. Oil adds to rising price pressures that OPEC Plus prepares to meet. So that's obviously a bit of a focus in here going into this week. I think OPEC Plus from tomorrow, right? Oil reserves the future of OPEC Plus unity as a minister. Yeah, group prepared to meet on Thursday. So they're meeting from Thursday as well. So that wasn't on my calendar. We do have OPEC Plus meeting from tomorrow. So stocks kind of did dip back lower yesterday, kind of start rebounding here this morning. And Wall Street pulls back after last week's rally with inflation in focus. Well, yeah, but it's only a slight dip back lower. We'll come to look at the charts. And again, in Dow S&P futures inch up. So yeah, that's more like it. We're actually and Salesforce climbs. And then just looking at the charts in here. So European indices in here this morning, kind of mixed bag. So we've got DAX is slightly up. The CAC, the French DAX is the German index, up 3/10. CAC, the French index, pretty much unchanged. Some of the other more minor indices in here slightly lower. The FTSE 100, the UK index in here is down about 1/3% in here. So kind of a mixed bag, either side of unchanged for the major European indices. And we'll just look there at the US futures in up. Futures in here, Nasdaq slightly higher in here, S&P 2/10 basically, and we've got 4/10 up for the Dow. Okay, let's have a look at the Fed tool. This has kind of changed a little bit since we've last looked at this, which was a little while back. So last week, I haven't been on with you guys, so we've now got pretty much nailed on that we've got 50 basis points coming at the 15th of June meeting. So just over 2 weeks time, nailed on 50 basis point rate hike. Only a slight chance of something more in here. So really just saying, that's what we're going to get. And then even going out to the July meeting now, that's another 50 basis point there. So we're currently at 75 to 100. So going out to the July meeting, you can see down here at the bottom, 175 to 200. So that's saying 250. So 50 at the June meeting, 50 again, with an outside chance in here of maybe a slightly bigger rate hike at the July meeting of 75 basis points, but very little chance of that. It gets interesting when we get out to all September though now. So now I'm going to start looking out to all September. And so if you see in here, this in here, so remember we're at the target rate is currently 75 to 100. So by the July meeting, we're expecting that as 175 to 200, 250s, right? So in here, this is only pricing in another 25. So there's, they're pretty much saying, the biggest chance in here, basically 2/3 of it, 2/3, 60, around 60% in here, we're saying is for another 50. But there's a third chance, in here that we're going to actually get only a 25. So starting to move to slightly more dovish tone as we go out into the September meeting in here, expecting not as aggressive rate hikes. Maybe the Fed, maybe from what those more recent comments to us of a pause in September, because the Fed's going to want to weigh up. It's hike rates kind of quite aggressively through the first half of the year. They're going to want to weigh up. Obviously, the whole point is to get these very, 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 very high inflation numbers down. However, there is going to be a potential negative impact on the economy, clearly by increase in interest rates. So there may be a pause. So maybe this is reflecting that a little bit in here. And if we go out to the November meeting, then we've got in here. So where were we? So at the September meeting, this in here is 350s. 225, 250 is 350s. 225, 250. So that there's a chance in here by that meeting we're still only at 350s. So they're and then in here only another 25. So certainly looking for the Fed to maybe kind of pull back as they go into September and into the latter part of the year on the rate hikes. Okay, that's what that tool's telling us. Right, let's take a look at some charts. So we got that little pop higher in here back on Monday during the shortened session. Notably lower though yesterday, but then look, that rebound after oil backed off. Let's go take a look at oil actually, because we'll probably see just on the timing as well if I go and zoom in on the oil chart. So we're on the 15-minute chart in here on oil. So look up here. So this on my so this is set to my time zone. Okay, so this is set for so at 2 p.m. This was yesterday. Oil was up at its highs. Okay, so 2 p.m. my time. So 2 p.m. my time, by the way, guys, is just so the U.S. equity markets opened at 2:30 my time. Okay, just to give you some guide. So I'm just going to do it off my time. Otherwise, I'm continuously transferring back to local to your whichever time. I don't know what time zone you guys are in. So I'm going to stick with my time in here. So just before the U.S. equity markets opened in here, oil was up here at its highs, and then you see there was a big retreat through like 4 p.m. and then a big retreat in here. So this was bang on 6:45 p.m. my time, big sell-off in oil. And now if we go take a look at the stock indices in here, and I'm going to zoom in on the 15-minute chart in here, so you can see stocks in here just before the US open in here. So here we are at the same time. We're down on the lows. This is when oil was at its high. We're down on the lows. And you can see the same rebound in here as the market moves through. And here's that surge higher, As oil sold off, we saw this pop higher here. These two bars here, this bar here, those two sell-offs that we saw on oil, this one here, on oil, so you can see it on this chart. I'm going to zoom in back in again in a minute. But as you saw the sell-off there in oil and the sell-off there in oil, I'm going to zoom in here. We saw these pop higher, boom, that pop high there, and boom, that pop high there as oil sold off. So clearly the market in here, very reluctant to push higher with oil prices higher in here. And if we go, and if I just flip back to the oil charts, we are, if you're trading stocks in here, you've got to keep an eye on oil. Now, where are we? We did get a rebound in here this morning on oil, but you see oil's rolled back lower. So oil down is going to be positive for stocks in here. The stock market is definitely watching the oil price. So if oil can dip back lower, so at the moment we're selling back off again. If we go back towards yesterday's lows, we've got the overnight low down here at 114.58. Now this is on the July contract in here, and then we've got the low here over from yesterday is 114.15. Okay, so if we can get down to these kind of area in here, into the mid to low 114s in here, then oil looks more vulnerable. And if we go and take a look at the bigger chart, like this, and I'm going to flip to the daily chart on oil. So I think it is important. Now look at that on the daily chart. As I said, look, we made a new high. There's the high. So effectively that's the all-time high on this contract. Okay, well, not all time. Yeah, well, it will be the all-time high for this contract. Okay, so we broke through that. We broke through that Monday through into Tuesday, and then look, this is a really, really negative candlestick. Okay, that I can't stress how negative that candlestick is. It's a big failure candlestick. We make a new all-time high for this contract. Okay, and it's obviously getting towards multi-decade high on this contract. Obviously if we were, it actually traded in dollar terms higher previously than where we are now. But for this contract, it's the high. So if we were back trading on the previous contracts, we would be at new highs in here for oil. So we are we've pushed significantly higher, and then it's a big failure. We fell all the way back down. Like, what was the failure from the high? It's basically, it just fell just below 120. So maybe that was that psychological, maybe option barrier at 120. The market fouled there at 119.98, right? And then we closed out at 115.26, right? So it dropped the best part of $5, okay? $5 back lower, significant drop. And this is a really negative failure candle. It's an outside pattern, okay? It's a bearish outside pattern because we closed down on the day. So it's an outside pattern, meaning the high and the low are above and below the previous day's high and low. So it's a bearish outside day. It's not a bearish engulfing, but it's certainly what we call a dark cloud cover. It's not really a shooting star candlestick, but it's super negative, believe me. And the fact that it comes having broken above that peak over there from back in March is really significant. If we undercut the low that I just flagged at 114.15, if we undercut that low today, this could significantly fall low. Now, obviously, we're going into the OPEC Plus tomorrow, right? So that's going to be significant as well. But we could easily drop down into this kind of area here. We could easily see a move down towards the mid 112s, okay? If this goes down here now with the correlation, so that kind of tells you what I'm thinking on, and we've already looked at the intraday in here, through here, then it opens up down into here, like one, and you've got this important low here as well. Swing low there at 112.85, so this looks really vulnerable in here at the moment. And if this starts to sell off, right, that's going to put, it's going to help stocks, and then so in here, if you look at the stock indices, so yeah, we've had that, there's the big push higher from last week. The market then significantly corrected back on Tuesday, then rebounded. We're in consolidation. I don't know where that trend line comes from. It's got an old trend line there. No. So, look, that's really interesting. Remember, we had this. This is the inverse head and shoulders. There's the neckline on the inverse head and shoulders. Look how it held it kind of here, and look, we held it again. Now this doesn't happen very often. Take this. Maybe with a pinch of salt. I'm not sure. Even as a technical analyst, and I've done this for 30 years, I'm like a bit like, well, is this really working, or is this not working? It's significant though. I mean, that's really seems to be respected. They kind of respected it here. Gets respected there. Kind of getting quite excited. God, I'm 52, getting excited about my charts again. But look in here, let's take a look at this this trend line that comes off the low. I think this one's going to be more significant, and we'll ray that out. And we'll say there's a default one, apply that out. Okay, so we're a long way off there, but let's see the next step up, the next trend line. Oh, why is that not showing me? Why it sometimes does this. Trader rate just doesn't allow you see the. I don't know why the menu disappears every now and then. Oh, there we go. Let's go refine it. So let me go and let's put the next step up. This one through here now. Oh, that's really nice. Okay, this one through here. Works really well. So that you kind of get another touch there. Market comes towards, moves away, and we come right off it this morning. Boom. Okay, I'm going to leave this one on this neckline to the inverse head and shoulders. But this is the more important one, really. This one that comes off through here. Okay, you get the acceleration away from it at the end of last week, comes back, and now it's gut checking it. Gut checked it here and held. That was on yesterday, and then come down, and then again this morning, and then we're pushing high. Now, what I'll be looking at now is zooming in. What does it need to overcome to say? And you see, with rallying now, with oil pushing low, we're rallying now. You've got these little internal lines. We've got the big line. Okay, so this is the probably most important one here, right? And you can see respecting it through here. Now, if you want to get in maybe a little earlier, you've got this internal line here. Comes through here. Okay, if it takes out, it's not drawn off that high. There you go. Now, that's not far above where we are now. And you can see in here, you've got a little double bottom going in. Bottom is holding these supports over here. Okay, these supports are in the like 41, 24, 23 area. It's held again. You've got potential little of this down move. You've got a double bottom going in here, and it's just completed that double bottom by pushing above that peak there. It takes out this trend line and certainly this bigger trend line, so up through like 41, 47, 48, then this looks like we're back up to this peak in here. At least, I would say. That's up at 41, 67 and 3/4, and then potentially even higher. Yeah, I'm kind of quite bullish today. I'm mostly bullish anyway, but I'm fairly bullish on this today. Let's take a look at the NASDAQ, how that stacks up. So again, dipping a rebound yesterday. In here, the market's already put this bigger, just going back to the S&P actually, you've got this bigger bottom's gone in anyway, right? This double bottom that we spoke about last week through that level there. And the NASDAQ completed that as well through this peak here. And then kind of went and gut checked it yesterday. So those peaks there, gut checked it back higher again. And we'll see that. I think we've got, it's a horizontal line on the NASDAQ. Now, down below. Okay, it should be this line across here, so I'll put that one on, up through there. There it goes there, and you gut check that break above, that's that peak that we just looked at. So you got this pattern down here, this basing pattern, and the market went and gut checked through this line here. Doom yesterday, boom, back above, and then gut checked it again here. And then again here this morning, and then again here this morning. And if we zoom back in again in here, again, you've got the same line coming off the top. And you've got the internal one, which I think we've broken already on here. You'd either you can draw it down through here, okay, where we've broken it. Yeah, I mean, that's what you would draw it through there. And then look, because even if you draw it here, it's going to be the same line. So that's a really good line here. And we've just looked, and look how impulsive this is. So that's really important, yeah, guys. So I think NASDAQ's leading the way back higher. Oil going lower. Let's take a look at oil right now. Yeah, I mean, oil looks vulnerable. If oil breaks down through these overnight lows in here, particularly if it takes out that 114, was it 114.15 we said? Takes out 114.15, that's going to be, the market is definitely watching oil. The stocks are watching oil. So, and NASDAQ is liking this at the moment. It's leading the way back higher. So, yeah, I'm getting quite positive on this, for the next break to the upside. I'm just going to give a quick nod to gold and then we'll wrap up. So I know some of you guys look at gold. So in here, gold in here, let's go back to the dollar. Now, dollar has rebounded. So dollar put this topping pattern in, looked very negative. We did rebound yesterday, higher again in here today. So a rebound in the dollar and negative for gold. So if we just go to gold in here, you see gold's rolled over as the dollar's gone higher, took out these low in here, looks more negative, pushing lower again in here. Now, we're not actually on the June, so I've got the wrong contract in here. If I go into it, we'll see it on the... So it should be sketchy data, yeah. So I need to update in here. So let me just go into GC, and it's actually, I think the front month's Q. It's not the July contract. It's the front month on gold now is the August contract. So I'm going to get rid of this one, so we don't have the June getting in the way anymore. And we'll update the gold, and I'll put the daily chart up as well, GCQ. And then we'll get the daily. So there's the daily, but it's the same chart, So rolling back lower, goes through this low, completes the top, lower in here this morning. So gold looking negative on the daily, and on the intraday, yeah. I mean, look, it's just bear trend, It's just where you get in, and the fact is it's breaking lower in here now. So takes out the lows really. The next step is takes out the lows. You had the kind of little opportunity in the last hour or so on this little rebound to get in. You've got classic downtrend, lower lows and lower highs, very, very uniform in here. Looking for the next break lower in here. Now, the only thing I will be a little bit worried about, if we get a significant break back higher in the equities and lower in oil, higher in equities, you could see then the dollar, that takes us into risk on. So then the dollar sells off on risk on. So if the dollar stays capped, here's the dollar index. If the dollar stays below yesterday's high, so on the dollar index, yesterday's high is 102.20.5. And we've pushed up towards there. But if the dollar stays below that, I would just be a little bit wary of the dollar pulling back lower. If we go to risk on, stocks up, risk on, stocks up, risk on, dollar down, gold up. So it feels like it's the wrong way around, right? So gold's going up on risk on. It's a safe haven, but it's not been acting like that. So even though I'm negative in here and it looks like it's going to break, if we hold the low in here, we go to risk on and this types. Now obviously at the moment stocks are rallying and this is going down, so it's not really correlating that way. But if this holds this low, just be a little bit careful. If stocks start to go on the motor on the upside, we could easily get a reversal, and then you'd be watching all the obviously the downtrend lines in here. So you got the one off the top in here, the shallower one, which is got a really good third touch point there. But then I think more important is more like this internal one down through here. And you'd want to see it back above. Well, really, I wouldn't be even entertaining going long gold until above that peak from about an hour or so ago. That's 1835.4, and then really you want it up through like 1840 up through here. But at the moment you're playing it from the short side. But just be wary on gold. I would just be wary if you're a gold trader, watching out for stocks up, and it could see a turning point in gold. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Please do stay safe out there. I'll be back with you another bull versus bear webinar tomorrow on Thursday. Bye.